Good green opening across indices. Flat on the screen right now on the Nifty and the sensex, but we're off from the session high. Well, this is turning out to be quite the ugly afternoon. Markets have fallen for the fifth consecutive day.
The market is looking a little nervous out there. And I think as we speak, though, there is a bit of a recovery which seems to be setting in, right?
What's been a painful, difficult session for our markets. We're not closing at the day's low, but we're closing pretty close to that.
Hello and welcome to Markets Today. I'm Sonia Shana and these are all the top headlines for the day. The Sensex and the Nifty decline for the fifth straight session. For the first time in 7 months, the Sensex loses over 500 points, breaching the 64,000 mark intraday. Nifty Bank Index turns negative for 2023. Axis Bank beats expectations in the second quarter. Loan growth and asset quality is the best in over 7 years. Deposits grow 18% while margins also improve. Tech Mahindra misses estimates in the second quarter as dollar revenue growth declines by nearly 3%. Margins at 4.7% also miss estimates. Torrent Farma surges over 3% after reporting revenue growth of 16% in Q2. And Keval Kiran sees a gross profit margin surge by 130 basis points. And casino operator Delta Corp rallies as the Bombay High Court bars the DG of GST in Hyderabad from passing the final order on GST notice. Festive cheer keeps Maruti in the green. The car maker sells 1 lakh cars in the Navratri period, while Vedanta gains on the former CFO Ajay Goyal's return to the group. The Nifty Metal Index outperforms despite the fall in frontline indices, ends marginally in the green. Globally, metal prices remain firm. Meanwhile, crude oil prices fall for the third day. Well, here's the lineup of what we have in store for you in Market Opinion. Pankaj Tibrewal, the Senior Executive Vice President and Fund Manager Equity at Kotak Mahindra AMC. In Big Corporate Voices, we have Shashank Srivastava, the Executive Director at Maruti Suzuki. Well, let's start with the market action now. The sell-off continued on the Wall Street. The Sensex and the Nifty declined for 5 straight days for the first time since March. The Nifty Bank fell in line with the blue chips and turned negative for 2023. Meanwhile, the mid and small caps fared slightly better but ended over 0.25% lower. BSE companies have lost market capitalization of 2 lakh crore rupees today and a total of 9 lakh crores in the last 2 sessions. Prashant is here with the market action. Prashant.
Well, the selling from day before yesterday continued. That is Monday, which was a pretty poor session for bulls. We had a break yesterday and then we came back with wishy-washy kind of global cues. US markets were neither here nor there, not definitive. And we started on an okay-ish note. There was even an attempt at a bounce, about 45-50 bounce points, but it sold off pretty quickly and then never really recovered, down about nearly 1%. Bank Nifty, a little better, but down about 0.75%. But mid-caps and small caps were down, but actually did the best. The small cap index will come up on your screen. That lost only 0.25%. That's been the strongest of the 4 indices all of this year, and it held its own, losing very little. Large caps which lost, no real, one color, hue or sector, subsector, etc. It was across the board. Infi, Cipla, Apollo Hospitals, NTPC, SBI Life, Aisha, some of the names. Metals as a pack were higher. Coal India, Tata Steel and Hindalco, although there was no real news flow. Maybe something with what's happening in China. Broader markets and what lost advanced decline was pretty poor, almost at comparable levels to Monday. Cochin Shipyard, HEG, there was Bector Foods, Data Patterns, Fusion Microfinance, Jubilant Pharma, MMTC, Safari, PG Electroplast, Repco Home Finance were some of the ones which got hit the hardest. And there were winners as well, so it was not all down. BSE almost at 1,800, Indian Overseas Bank, Welspun Industries. Welspun, big cut Monday. Today, recouped those losses and actually added, so technically strong signal. Delta, Amber, Angel, Bajaj Consumer, Sequent Scientific, and a few others as well. I want to sort of wrap this market wrap-up with a few views, both from a global and local perspective as well. So this is Bill Ackman of Pershing Square, who runs a very well-regarded hedge fund. He tweeted day before yesterday saying that they've covered their bond shorts, but that's not what I'm focusing on. He says there is too much risk in the world to remain short bonds at current levels. The economy in the US is slowing faster than what recent data suggests. So this ties in with what many fear will be a much slower world economy sometime in the fourth quarter. Akash Prakash of Amansa Capital runs a few $1 billion here in India. He says the primary concern regarding India is valuations. India is now, along with the US, the most expensive market in the world, but ends on a positive note, says a wall of money is waiting to come in on corrections. And lastly, a technical view on India. Lawrence Belanco, well regarded at CLSA, the technical analyst, says some patience is warranted as the market works through a corrective phase of its price momentum peaks, which were registered in September. Through this corrective phase, weakness is likely to 19,200, 19,230 area, and potentially a retest of the 18,500 to 19,017 area could be seen as levels to add to new long positions. So not really giving up, saying perhaps this weakness has some more way to go, but at those levels it would be better risk reward once again. Back to you.
All right, markets are down for 5 days in a row. In market opinion, Pankaj Tibrewal, the Senior Executive Vice President and Fund Manager Equity at Kotak Mahindra AMC, says that the large cap space is seeing a derating. He adds that from a valuation perspective, globally and locally, we need to be careful.
Since September 2021, the large cap universe is up by almost 13%, the market cap. And if you look at their aggregate profit growth, it's up more than 40%. So there has been a derating in the large cap. And almost in our calculation, more than 40% of Nifty stocks have not participated from the run from 15.5, 16,000 to 19,000, which provides cushion on the downside. Geopolitical risk, which are kind of increasing. Last year it started with Ukraine, Russia. Now the Middle East, the Israel-Palestine or the Gaza part is creating some kind of a nervousness. On the other side, you are looking at the 5% bond yield. And if you look at since September of 21, the correlation between bond yields to Nifty earnings yield has been a staggering 85%. It has not been so highly correlated. So from a valuation perspective, also globally and locally, we need to be careful.
All right, to the second headline now. Axis Bank has beaten street estimates in the second quarter. The bank has reported its best loan growth in 29 quarters. Deposits have increased by almost 18% on a yearly basis. The net interest margin has also improved. Abhishek is here with the key highlights. Abhishek, over to you.
Well, first look, it looks like an amazing set of numbers coming in from Axis Bank. It has beaten our poll, and the loan growth on a YY basis is perhaps one of the best in 29 quarters. Take a look at deposit growth, as you mentioned, at 18% YY is one of the best in last 7 quarters. The advances growth of 22.8% YY is the best in last 7 years or even more. And sequential loan growth is at 4.5%. This means that the credit deposit ratio at 93.9% is the best in last 20 quarters. Hence, the net interest margin over here has seen an improvement both YOY and quarter-on-quarter. And unlike peers like ICICI Bank or Kotak Bank, where the net interest margin had declined anywhere between 25 to 35 basis points, over here sequentially there is an improvement in net interest margin by 1 basis point. Asset quality, the annualized slippage ratio is at 12-quarter low of 1.45%. Analysts were working with a number on slippages anywhere between 4,500 to about 4,200 crore, but it has come in at 3,254 crore. So 30-quarter low in terms of gross NPA ratio at 1.73%. Motilal Oswal was working with a number of 2%, and 33-quarter low of net NPA ratio of about 0.36%. Again, Motilal Oswal was working with a number of 0.4%. Back to you.
All right, thanks a lot for that. So good earnings coming in there from Axis Bank. But the third headline today, Torrent Farma gained over 3.5% after it reported a good second quarter numbers. The company's total revenue grew 16% on a yearly basis. Meanwhile, India revenue witnessed a substantial 18% growth compared to the same quarter last year. Ekta is with us to tell us what this means and what brokerages have said. Ekta.
Thanks for that. Well, largely an inline set of numbers. Revenue was up 16%, margins 31%, profit up 16%. India did well. It was up 18%. Brazil and Germany grew in double digits as well. The US was below estimates, $30 million versus estimates of around $34 to $38 million. On acquisitions, the company said they're more comfortable with acquisitions in the Indian market. Net debt to EBITDA has gone as high as 3 times due to acquisitions in the past. Hence, they are willing to increase leverage for acquisitions. Net debt to EBITDA, they are targeting at around 1.16 times, which will be less than 1 by March 2024. So less than 1 by March 2024. Brokers are positive. Elara accumulate target price of 2225. Business performance remains steady according to them. Nirmal Bang buy, target price of 2197. Strong performance across branded markets. Nomura has a buy call as well. According to them, the Q2 earnings was marginally below estimates. HSBC buy, they are positive on the structurally strong business profile of the company. Jefferies has a hold. According to them, capital allocation will remain disciplined as per the company. And Goldman Sachs has also a buy rating and a target price of 2325. They forecast a 20% EBITDA CAGR over FY23 to 26 for the overall business. So if you're just talking about the numbers, it's been a good steady performance for Torrent. Obviously, the street will wait and watch what the plans are when it comes to any kind of large M&A.
Thanks for that. In some more earnings, Jubilant Foods reported a mixed bag in the second quarter. The company's net profits missed street estimates at 72 crores versus expectations of 80 crores. However, revenues met estimates at over 1340 crores and margins at 21% came in higher than street estimates. Net profits and margins declined, but revenue has grown over 4%. Well, as we are in the middle of the earnings season, let's shift focus to the healthcare sector. The space is expected to report a strong second quarter results. Ekta is standing by the wall to take us through the key highlights. Ekta.
Let's start with the hospital space. Hospital companies are expected to deliver a healthy quarter aided by seasonality with EBITDA growth of around 11 to 12% on an adjusted basis. In terms of key hospital parameters, analysts are expecting around a 2 to 4% improvement in occupancy due to higher volumes on account of seasonal infections such as flu, dengue, etc. Average revenue per occupied bed to see an uptick year on year, but Q-on-Q could see some amount of moderation due to the case mix. Now watch for contribution from medical tourism, which is expected to see an uptick on a year-on-year basis. Stock specific, Apollo Hospitals is expected to report around a 12% growth year-on-year, with healthcare or hospital revenues expected to grow around 7 to 9%. Key parameters to watch will be occupancies improving from the 62% reported last quarter and performance of the digital arm Apollo 24/7, such as reduced losses, and the GMV, which is expected to surpass the 3,000 crore guidance for FY24. Max Health is expected to show a steady EBITDA aided by improved payer mix as well as occupancy. Fortis margins likely to improve due to the sale of Arcot Road Hospital in Chennai. Narayana Health likely to see continued momentum in Cayman Islands unit, while more specialized plays such as HCG will benefit from radiation revenues. Watch for numbers from newer listings such as Jupiter as well. Moving on to diagnostic companies, growth is expected to be driven by non-COVID-19 volumes and realizations due to price hikes taken by some. Watch for growth from the preventive or wellness segment of the companies which have been doing well. Margins expected to be stable Q-on-Q. Stock-specific, Dr. Lal's is expected to report around a 9 to 10% growth in volumes, 1 to 2% increase in realizations. Metropolis in its Q2 update reported an estimated core business growth in early double digits. The reported numbers will be impacted by a loss in a government contract. Let's wrap it up with MedPlus. The company is expected to likely report an over 25% year-on-year growth, led by store additions and strong seasonal sales. Diagnostic sales could increase by as much as 20% Q-on-Q. Let's leave you with the valuations of first hospital companies, followed by a couple of the diagnostic companies.
All right, thanks a lot, Ekta, for that. Well, in more earnings, Tech Mahindra reported a weak set of numbers, missed estimates on profits, dollar revenue and margin. Rima joins in with more on that. Rima, over to you.
Thanks so much for that. So it's a miss on revenues and margins. The top line for the company has declined by 2.4% on a quarter-on-quarter basis in constant currency terms. This is lower than what the street was anticipating. And this marks the second consecutive quarter where the revenues for the company have fallen. Margins too have come in at 4.7%. If you look at the reported numbers, and remember in the prior quarter, margins were impacted due to a one-off, a 200 basis points impact due to a bankruptcy at a client. So the actual margin decline is more than 400 basis points. The reason for the miss in the revenue and the margins is, one, discretionary spending is coming down, particularly in the communications vertical, which is about 37% of their top line. And secondly, the company is prioritizing on certain business, their core business. So therefore, the non-core business, they're exiting. So they could be in challenged markets, challenged projects where margins are on the lower side. So this, exiting certain businesses, scaling them down has impacted their revenue and margins this time. And that's what's, hurting them quite significantly. The street, as we told you, is looking out for the big picture for Tech Mahindra, that under Mohit Joshi, how can the company turn around? Well, we asked him in the press conference, and he said he's he's going to share a revenue revamp, a margin overhaul, organizational plan only in April. So the strategy to revive the company will be known only in April. As of now, it's a miss on revenues and margins.
Okay, Rima, thanks a lot for that. Let's dip into a quick break, but stay tuned. We'll be back with all the other headlines that we've been tracking for you. Welcome back to Markets Today on CNBC-TV18. The fourth headline today, Delta Corp surged after it received interim relief on the show cause notices from the tax department. The Goa bench of the Bombay High Court restricted GST officials from passing orders on the casino company's tax shortfall without the court's approval. Mangalam joins in now with the details. Mangalam, what are you picking up?
It is a relief rally indeed for Delta Corp. They told the exchanges that the Goa bench of the Bombay High Court has directed the DGGST of Hyderabad to not pass final orders on the 16,200 crore GST tax notice that had come about in September itself. Remember, for Delta Corp, between September and October, there have been GST demands worth nearly 23,000 odd crores. And the Bombay High Court's Goa bench has said that, the DGGST should not pass final orders without the prior permission of the court itself. The company on its part had earlier indicated that they will pursue all legal remedies to challenge the GST tax demands and related proceedings. Turns out that there could be some relief in that. But however, these issues are long drawn, and we will hear the rest on that. For now, it is a positive and a relief rally on Delta Corp.
Okay, thanks a lot, Mangalam, for that. Well, festive buying has brought cheer for car makers like Maruti. The company sold around 1 lakh cars in the Navratri period. Senior Executive Officer of Marketing and Sales at Maruti told CNBC-TV18 that the company may sell 1.4 lakh cars in the next 15 days. So which cars are people buying? Shashank says the SUV, the MPV, the premium hatchbacks and entry-level sedans are seeing the highest growth. Maruti is giving the highest discounts for Alto, Espresso and Celerio due to higher inventory, and therefore the company is cutting back on production of entry-level cars. Listen in.
We have sold in this period about 3.11 lakh vehicles against 2.6 lakh vehicles of last year. That's a growth of about 20%. SUV, the MPV, the premium hatch, the sedans, entry sedan, those have shown a good growth for us. The entire festive season should expectedly close with 1 million plus sale for the industry and 18% growth.
All right, it's a revolving door of CFOs at India Inc. Ajay Goel has returned to the Vedanta Group as CFO after a brief stint of 6 months with Byju's. This after Sonal Srivastava resigned from the post amidst major structural changes at Vedanta. The stock surged in trade post this development. Nisha is here with more details. Nisha, what led to the move?
That's right. The CFO's position at Vedanta, a large conglomerate in metal and energy space, has been unstable for the last few years. And now Ajay Goel rejoins the company from October 30th. Remember, this is the fourth CFO in the company since the year 2021. But one must note that Ajay Goel is an old hand and brings back hopefully the stability. And that's why Vedanta stock was much stronger than the rest of the weak market today. From October 2021 to April 2023, Ajay Goel was the CFO of the company, and it is critical at this point for Vedanta to have a stable CFO because his role becomes very important in the next 2.5 years, where Vedanta has taken up massive corporate development plans, and also debt burden needs to be repaid in this 2.5 years. So in looking at the developments, massive restructuring of Vedanta into 6 listed companies, Hindustan Zinc's restructuring, and on top of that, the debt repayment, the bond maturities coming in from January 2024 to about end of 2026 worth $3.8 billion, where a CFO will play a critical role in not just discussing refinancing, speaking to the lenders, comforting the stakeholders, and going through the massive restructuring plan. Anil Agarwal, in a recent interview to CNBC-TV18, had said that his vision is to have a debt-free company.
All right, thanks a lot, Nisha, for that. The fifth headline today, the Nifty Metal Index outperformed in trade despite the fall in frontline indices. Globally, metal prices remained firm. Meanwhile, crude oil prices fell for the third day. Manisha is here with the details. Manisha, over to you.
Well, yes, it's mixed cues from commodities. Positive news coming in from crude oil prices, though, where we have seen 3.5% of decline in prices. This is after 10% of gains in last 2 weeks. But with the decline, we're trading at a one-week lows for the crude oil prices. The pressure comes in from the fact that the Israel and Hamas conflict seems under control right now. There is no damage or disruption to crude production or exports, and that has taken some premium off. Apart from that, the U.S. also suspending Venezuela's sanctions has been positive or rather bearish for the prices. And then the weak PMI number from Germany, UK and much of Eurozone has weighed on to the demand side of sentiment here. The markets also read the report from IEA, which says that the fossil fuel demand will peak in 2030. That also led to some profit taking coming in for the prices, so we continue to hold below that $90 per barrel mark. But it was a good day for the metal prices. Copper, aluminum, iron ore, all of these prices got lifted from their multi-month lows. We saw 1 to 3.5% of gains overnight for many of these metal prices. Support also comes in from the fact that China is looking to improve additional sovereign debt issuance, and that led to buying into the markets. The street will also watch out for the US Fed monetary policy meeting, which is next week. But ahead of that, in this week itself, there is the GDP numbers and the inflation data to react to as well. And that is where the markets will take direction from.
Okay, thanks a lot, Manisha, for that. With that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.